It's still early if you buy Bitcoin today. It's not too late, I think. If you haven't invested in Bitcoin yet and feel like you missed out, you're not alone. 95% of buyers haven't invested in Bitcoin either. If you buy Bitcoin today, you're still ahead by a lot. When you compare Bitcoin wallets to the internet, things are back to how they were in 1996. The internet grew very quickly after 1996. That means it's still early days. Around 95% of investors have never heard of Bitcoin, and around 99% of investors have never heard of XRP. That's why I'm playing Tom Lee's clip and breaking it down with you guys in today's video. To be honest, I do think Bitcoin is a good investment. But I think XRP is even better, and I think July will be even more explosive than other months. It's also a better time to buy than other months because we can get it at a very good price before rate cuts happen at the end of the year. You could buy XRP for 1/10 of the price if you knew it would be worth 3 months' worth of money every day. Would you pass up that chance? Truthfully, I believe that is the chance we have right now, and I'm not going to let it pass me by. When I talked to XRP in November, I was right about this. I talked about the election super cycle. As expected, the price of XRP went up 6 times in November, December, and January. Yes, there was a drop from the $3 high point to where we are now. It's true that prices have been flat for a while, but I want to tell you that I've been talking about and buying XRP for 2 years, long before the election chaos. XRP was something I bought every day on the markets, and I still had big sums from when I bought XRP during the last bear market, which was 4 or 5 years ago. After all of that, I want to play what Tom Lee has to say because he makes some great points in today's video about the future of banking, US debt, and cryptocurrency. Press the like button for everyone to see it. Wait until the very end. Let's start. What do you think about the market as a whole, where it is now, and how do you think it will be in the second half of 2026? The stock market in 2025 was hit by a black swan when Tariff Freedom Day came as a surprise. This caused stocks to drop 20% at one of the fastest rates seen in 100 years. Only 12 times in history have stocks dropped at the same rate and for the same amount of time. And I think a lot of people made a mistake when they thought that shock would make them afraid. We did think there would be a correction this year, as you said. But I don't think we turned bearish, even though this was a big drop, because of 3 things. There were a few things we didn't expect President Trump to do. From the start, they said this was the deal and everyone had to go along with it. But we thought they would change their minds, and that's what happened. From what we've seen so far, the taxes are a lot less harsh than many people thought they would be at the beginning of the year. In fact, things are better now. The second is that a lot of experts told you there would be a recession. Remember how all of these economists said there would be a recession? That's why everyone got scared and sold their stocks. We don't always listen to economists, though. We'd rather keep an eye on the high-yield market. Even though the high-yield market was bumpy, it moved in a way that suggested there might be a growth scare. A growth scare is not the same as a decline. It makes sense for everyone to be careful when there is a growth scare. One more reason we didn't become gloomy is that V-shaped recoveries usually follow waterfall drops like the one we saw. That was our case for why this would bounce in a V-shape. We were pretty sure of it because the VIX, which shows how volatile the market is, went up to 60. And if you look back 35 years, you have to buy stocks whenever the VIX has been above 60, no matter what you think. The market is so scared that no one is setting prices, which is why you need to buy that. Stocks went up in a V-shaped pattern. It seems like a lot of people are still gloomy, even though we're almost back to the old highs. Maybe I still think that you guys in the crowd are bearish. I don't understand why stocks came back. I don't want to buy stocks right now, but remember this. We've already seen a 20% drop in 2025. A 10% drop between now and the end of the year is not likely at all. It could be true. By statistics, 0%. That means the stock market might stay flat for a while, but it's not likely that it will go down again. Right now, the Fed is not lowering rates. He also said that he won't be lowering interest rates because he thinks that tariffs will cause prices to go up over the summer. It's possible that that makes sense. I mean, if someone told me that, I'd say I get it, prices should be going up because of taxes, but that's not how monetary policy should be run in real life. The Fed should really not pay attention to supply changes. If a supply shock, like a tax, causes prices to go up one time, the central bank shouldn't change monetary policy to account for that. This is because the Fed is trying to keep demand in check. They try to tighten monetary policy when there is a lot of demand for something that makes prices go up. But since taxes are more like a shock to the supply chain, the Fed should look into it. That's what the bond market is beginning to think. The bond market didn't agree with the Fed at Wednesday's FOMC meeting. Since people don't think the Fed should be on hold, interest rates have gone down over the last few days. Indeed, that was also our point. The Fed needs to make more cuts next year if they don't do them now. What's more, most people believe that stock market gains are only due to the Federal Reserve loosening up and making more money available. That's why, at the April lows, some people said the stock market couldn't get better because the Fed wasn't going to add more money to the market. But guess what? We still had a V-shaped bounce. That shows you don't need the central bank for stocks to go up. We think they'll cut a lot next year, though, which should be good for stocks. I also think you didn't really explain how we feel about industries this year when it comes to positioning. Our most called for areas at the start of this year were tech, financials, and industrials. That was the first, second, and third places. Industrials and financials have done better than the market so far this year, and tech is starting to do even better. That's really what we've thought this year. But I think it will be good for interest sensitive when the Fed lowers rates next year. It should really help financials as well as small and mid-cap stocks. Markets are unclear right now, which has helped XRP, Bitcoin, and other top altcoins do well. They did pretty well, in fact, a lot better than most people would have thought they would do at this point in time. I believe that is a very strong sign that XRP will experience some really crazy, fast growth once monetary policy loosens up and interest rates drop, as Tom Lee said. At this point, Tom Lee thinks that this will begin to happen in 2026 and that many rate cuts will follow. I do believe that we will see at least a couple before the end of the year. Because of this, I have a strong conviction that the fourth quarter, the last quarter of 2025, will likely be an exciting one with huge gains for all the major cryptocurrencies, including Bitcoin, XRP, and others. So, yeah, that's what I'm getting ready for again, and I can't wait for it to finally happen. XRP prices went up by 6x in November. If you thought that was great, you'll be even happy when I say that I think we could see 10x gains in late 2025 or early 2026 once the Fed really starts loosening policy. Yes, Europe, Canada, Australia, and even China have lowered their interest rates, which has helped the markets get a lot more money. But let's not forget that the US dollar is the main coin used around the world. The USDT trading pair, which is the US dollar, is used to trade almost all Bitcoin futures. This means that the US dollar has a bigger effect on the value of everything. I think that Jerome Powell is well aware of this, and he wants to try to stop the market from moving so that he can hurt Trump's image as much as possible. Right now, that's the only reason I can think of that makes sense for why he has been such a hawk with his rules, but you know there are many other options.